Sweet. This is the Post-Purchase Podcast. And today, guys, we're going to be talking about one of Sean's favorite topics, which is money. So, Sean, who do we have today?
Well, we have a very special guest today who happens to be been recruited, I just found out, by one of my friends, a.k.a. Allie. We won't give her away right now, but on this episode of Post-Purchase Podcast, you're going to find out more about money, why it's important, what you should be paying attention to when it comes to your business, how to easily fund your growth going forward without throwing the baby out with the bathwater, as they say, Seth. So why don't you introduce us to the man, the myth, the legend himself, Mr. Erik of SellersFunding. So let me swap out the logo for you there, Erik. Seth, who do we have here?
Oh my gosh. Erik, let me bring you officially onto the show and toot your horn a little bit. So Erik is a multi-industry sales leader, award-winning marketer, certified educator, and published author. He was an early hire at Heyday, which is an e-com aggregator where he connected with entrepreneurs ready to exit and rode that M&A wave. He currently works at SellersFunding, where he builds partnerships with aggregators and other service providers to offer funding, referrals, co-marketing opportunities. And here's my favorite part, Erik. You approach life with a default yes, and you love adventure. Erik, welcome to the show.
Hey, thank you guys. Man, I got to record that and put it on my dating profile or something. That felt good coming on.
You need to show it to your kids, Erik.
Yeah, exactly. Appreciate it, guys. Glad to be here.
Well, Erik, let's start at the beginning because that's a great place to start. So, Erik, how did you find SellersFunding? Why is SellersFunding so cool to you? And what is the reason why SellersFunding was created?
Yeah. Well, as you mentioned, so I was at Heyday as they kind of skyrocketed, and my role there was to reach out to I was hoping they were considering selling their company, to entrepreneurs, and try and convince them that, Heyday was the right place to sell. What I kept hearing in those conversations was entrepreneurs who were, had this business that they loved. They were trying to grow it. They put all this energy and effort into it. And so many of them said, like, look, if I could just get some cash, like if I could get my hands on $500,000, I could blow this thing up and it'd be 10x what it is today. Leveraging that little bit of seed money was something that was expressed to me so many times as I talked with them. And as you kind of alluded to there in the beginning, I was at an event. SellersFunding was there as well. Struck up a conversation with them, and I was like, okay, well, these guys, like, these are nice people. They seem like they care about what they're doing. And then as we started to talk about role opportunities, it kind of hit me, well, look, this is an opportunity to offer sellers what they've been asking for the last year and a half in my role at Heyday. If they could just get a little bit of funding, it could blow this thing out of the water. So seemed like a good move, and I'm glad I made it.
Great. So, Erik, thank you again for joining us here. We like to stay relevant, keep really good content, great personalities, and new tips.
I'll apologize in advance.
Okay, yes. We'll keep that out of your dating profile. But the biggest thing is, we understand what funding is. We think as entrepreneurs, as sellers, but in your experience working with sellers all over the world, which you guys are one of the biggest, let's just face it, why do most Amazon sellers misunderstand funding, Erik?
Yeah, that's a great question. I think there are probably as many answers as there are sellers. Finance is such an individual thing for everybody for a lot of reasons. But the big things that tend to get in the way, I think, are the idea that any debt is bad. A lot of people take money from friends and family to kind of get going. And that's, maybe forgivable debt or money that can sit out there as long as you want it. But there comes a point in every business where, to really put the pedal to the metal, whether it's because you get a huge PO and, now you're looking at, maybe $500,000 or $250,000 that you've got to spend for inventory, or if it's time to hire people. I think a lot of businesses tend to stagnate at that point because the idea of taking on some debt to leverage that and create that growth is pretty tough. Like, we're taught from the time we're kids that debt is bad. We should try and be debt free. Those rules don't necessarily apply to business. I have some experience in real estate, and one of the things I think is analogous is the idea of a mortgage. Like, most people don't own their homes outright, and you're leveraging that debt so you have a place to live that eventually builds into equity. A lot of that is true for business as well. Sometimes taking debt is exactly what people need to break out to that next level.
Nice.
I love it. So, Erik, when you're talking about growth and growth capital and using debt to grow, a lot of people are a little bit squeamish, aren't they? They
Sure.
think, well, I don't want to be one of those people that falls into this debt trap. But debt for your business isn't really the same type of cancer that it is for debt for your personal life, because debt for your business brings back more dollars with it most of the time. So it's completely different. So, Sean, let's get to the next question here for Erik. All right. So, Erik, this is specific to what you guys are working in every single day. So what right now in the funding space is changing for Amazon sellers?
Yeah, I think this, so this relates a bit to what you said as well. There is absolutely bad debt, and I want to be 100% clear about that. Like, the one thing I love about SellersFunding is that we're incredibly diligent and careful about our lending practices. We won't just throw money at every business. We're not going to like totally max you out to where, it's setting up this debt cycle. And that's just, I've seen that over the 9 months that I've been at the company, and it's proven itself out. So, I'm debt averse personally. Like, I live frugally because I like that in my personal life. So to me, the idea of offering debt to people in a way that's not sustainable or that doesn't actually help would make me feel horrible. So I should just say that in the beginning. What we're seeing a lot of, and this we talk about a lot internally, is, with our competitors, there's a lot of short-term lending. There's a lot of revenue-based financing. What we tend to see is that is the cycle that people get on, where it's really hard to bust out of that. The percentages that people talk about in those short-term lending situations, where it's like, hey, it's 6% for 3 months or something. When you truly do the math on that, and it seems obvious, right? But the 6% is really enticing. But when you really do the math on that, and you amortize it out, it's a ridiculous rate. It's double what we would charge. So those short-term lending cycles are what we're tending to see a lot of, and people get into that cycle and just tend to perpetuate, boom, 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 boom. And the revenue-based, frankly, like, understanding how that works is super important as well, where, it's really enticing to think, hey, I'm not bringing a ton of revenue in right now, so my payments are going to be lower. Like, that's really appealing. The problem is that when you start selling that inventory that you bought, when the revenue does increase, all of a sudden your usable capital is gone. Like, the cash, those payments need to be made. So we see a lot of people who refinance some of our competitors' loans through us because our terms are longer. The rates are all transparent, and we're not eating into capital. It's a set payment. So that's what I see a lot of. The RBF model is popular, but I would just caution people to really do the math and be careful about how you take your lending.
So basically, what you're telling us then, Erik, is if we need funding for our Amazon growth, then going to you would be like, if we go to SellersFunding, it'd be like going and getting a 30-year mortgage with a fixed rate on our home versus going down to the check cashing place and doing a payday loan. Is that kind of what you're telling me there?
Yeah, that's a great analogy. In fact, yep. I mean, our loans are typically, anywhere from 12 to 24 months, 36 months on the outside for larger, so yes, that's a really good comparison.
Okay, so let me ask you a question then. If you could go back and speak to all of your clients who you've helped with the growth through funding, what question do you wish all Amazon sellers would specifically ask before seeking a funding solution?
I think if everybody asked, what's the true cost of this money? Like, write it all out on a piece of paper, show me all the fees, show me, if I take this loan to term, what am I going to be paying? Just like you would, with your mortgage, so you can see it all there. I think that's a super important question.
So is there a such thing then, Erik, as the truth in lending when it comes to funding for businesses?
You'd hope. I've seen some. I'm hesitating because I want to be very careful, but
yes,
the answer is it depends.
It depends. So basically, there are some less than honest lenders out there. We'll just say to be nice about it, and you wish that sellers would dig in a little more and find out exactly what the money is going to cost them, and before they send their life away or their firstborn child, right? And it's just like anything else. You want to treat people the same way you want to be treated. So when it comes to funding, there's no difference. And I think I like what you guys are doing over there at SellersFunding. I've spent a lot of time talking with your colleague Allie about this, and it seems that you guys are just fair. And being fair is hard to find, isn't it?
Yeah, unfortunately, and I think that's exactly right. There's a sweet spot where our lending makes a ton of sense. There are obviously many forms of loans that you can get out there. Any government-backed stuff. If you're large enough and you have a local bank or something that you can work with, those are always going to be your cheapest options. And we'll tell people that. I mean, I'm saying it right now, right? Where we come in is in those instances where you need the extra bump, or there's an opportunity that you have to take advantage of now. That's where we really shine. So yeah.
Very awesome. So Erik, can you walk us through what your deal structure is normally like? Are you strictly a debt play? Do you try to take equity in people's businesses? What does the debt structure look like?
Yeah, great question. So there's no equity at all. So, the business owners maintain full equity of the company. Again, just kind of a standard debt setup. So depending on the type of loan, we'll kind of adjust the guarantee there. We have a number of different products to choose from. So, our main, I would say our most popular product is just a working capital loan, and that can be, drawn down. It can be re-upped. That's probably, I'm going to guess it's 70% of our business. Actually, in the last year, getting more and more popular are things like daily advances. So for smaller sellers, especially, or as they're coming up and they need to keep cash on hand, we can advance, prior day sales. And then we can also do things like invoice factoring. So, if people are moving into wholesale and they get a big invoice from Walmart or Target, we can buy that invoice so that they can, pay for that to.
Oh, very nice. So you guys have a lot of different options that I didn't know were available. So, Erik, what we love to talk about is actionable things in real life, situations that are happening out there. So, Erik, why don't you walk us through, you have an Amazon seller who comes to SellersFunding and then uses your guys' funding to get a result in their business. Walk us through like a case study, would you?
Yeah, sure. I have one comes to mind, and this maybe isn't super typical. But we actually had an owner that had an Amazon loan, which, are kind of famously cheap to take, right? They're lower percentage. The thing about Amazon loans is they're really unpredictable. So, they're kind of offered, you never know exactly what it's going to be. And the term is relatively short. So in this case, the client actually wanted to refinance this loan through us, which was going to be admittedly, a slightly higher rate, a couple points more. And on the surface, it's like, well, why would you consider doing that? What they found was that because our terms were longer, we could do this loan at a 24-month term. It effectively made, cut their payment significantly. And for them, the couple extra points was worth, refinancing that Amazon loan with us because it would reduce their payments. The other thing, and I don't want to sound like too much of a sales pitch, but the other thing that we also offer is we will typically do an interest-only period with all of our loans. So what that allows people to do, obviously, is if, let's say for inventory, if you're buying up inventory, you're going to sell that. Maybe there's some seasonality in your business. If you want to use a loan for inventory, you get let's say a 6-month interest-only period. You start to pay that back immediately as you sell. If you can pay that loan off early, there's no penalty for that after 3 months. So, you pay that off in 8 months, you've effectively taken the cost of that capital down to, single digits. So that was a great win for them.
Okay. So obviously folks out there are going to be watching this in our social channels. They're listening on the podcast platform. I have Erik's email up here if you want to pronounce this and spell it out phonetically for folks that are listening. Sure. Erik?
Probably smart. Right? My name seems easy, but people have trouble with it. So it's
Erik Davidek.
You got it, man. You nailed it.
But spell it out because
I will. So it's Erik,
like Swedish or Viking or something.
I know. So it's Erik with a K. It's ERIK. Dot Davidek is my last name. It's David with an EK on the end. So it's DAVIDEK at SellersFunding, all one word, .com.
Now, I read somewhere, Erik, on the website where you could get answers to sellers for funding in 48 hours if we just go to sellersfunding.com. Is that true?
I couldn't have said it better myself.
What
in fact, we can do, we've got like a pre-approval widget so you can get a really good idea of where your funding will come in like immediately. The application process is very quick. I mean, you can get set up on the system in, a matter of minutes. 48 hours. If if it's something you want to pursue and you want to get a loan, absolutely. We can get those done in 48 hours. So yeah, I mean, I would say, realistically, of course, it all depends on what you've got ready. We'll want to take a look at the financials, but connecting the storefront and filling out an application is really quick, and it gives a really clear picture of where we should come in on the financing side.
Awesome, Erik. So I love talking about growth. I love talking about everything that you guys are all about. But we have to move into the last part of our show.
Let's do it.
We have 2 fun questions here at the end. You already are prepped for this one, so this will be not quite as fun. But I still want to know the answer. What is your all-time favorite business book?
This is going to be a little outside of maybe the normal business realm.
Please.
But there's a couple that jump to mind. I'm going to give you 2 just because I love reading. The first is called Sapiens. So it's a history of humankind. And it's not necessarily a business book, but I think as I used to be a teacher, I taught history, sociology. Like the more we understand the way that we think, I think, it has benefits far beyond. The other is The Art of War. I mean,
Sun Tzu.
Hard to beat Sun Tzu. Yeah.
Sun Tzu. Not like General Tao.
I'm probably mispronouncing it. So.
All right. So here we go. Sapiens, which I love. It's about this thick.
Yes. Yeah. It'll take you all summer.
I think that's what caused me to do the switch from novels and fiction a few years ago when that came out. And I thought, wow, this is like mind blowing. A lot of good stuff in there, a lot of trash too. Just have to put that out there. Take what makes sense for you and leave the rest. And The Art of War. I love that. And I think I read that as a teenager, Seth. So there you go. Sapiens.
Highly recommend a reread on that one.
Okay, great. All right. So the next fun question, and I won't mess this up for me here. So think about this. Most of the folks watching this are entrepreneurs. We're sellers. We're into making money. And then we like to play hard as we work hard, right? So what is something, Erik, that you purchased in the last 12 months that some may consider as a splurge, but you don't regret it?
As I mentioned, I'm a pretty frugal guy, so I tend to wring the life out of everything I own. So for me, I bought. I love mountain biking. It's one of my. I'm a total outdoor freak, and I'm outside all the time. And mountain bike is one of my things. I bought a used mountain bike probably 8 years ago, and I've ridden the snot out of that thing. This year, I bit the bullet. I got a beautiful new Niner, like, hardtail. It's gorgeous, and I just bought it a few weeks ago, and it's brought me so much joy. It's one of those things where you buy it and then you kick yourself because, like, man, I should have had this for the last 5 years.
Fair enough. Seth, when we asked him the question, his splurge that he's not ashamed of was a ping pong table. It doesn't have to be a Lamborghini, Each his own.
Yeah,
right,
man.
Seth?
I mean, I'm from the Midwest. I'm Midwest cheap. For me, a new mountain bike is a pretty good splurge.
Yeah, that's amazing, and you can just tell the joy that's still radiating through you based on that purchase. And that's the same thing that happened for me with the ping pong table. It's just so fun to play, and you could never regret the time that you spend playing. So great interview today, Erik. Can't wait to have you back on a full blown webinar where you can walk us through everything that you guys do at SellersFunding and how what you do can help Amazon sellers grow. Sean, why don't you take us out of here?
Well, Erik, I appreciate you. Again, thank you for taking the time out on a Friday afternoon. Don't go anywhere when we kill the broadcast. We still want to pick your brain privately, but thank you so much. I think the folks out there in the post-purchase podcast world, episode 72, we're going to love this. And if you have any questions, folks, just email Erik directly, or to check out SellersFunding, go to sellersfunding.com. Thank you so much, Erik.
Thank you both. It's fun.